皆さんこんにちは。社長の荻野でございます。
I am President Ogino. Thank you very much for taking time out of your busy schedule to join us today. Today, I would like to explain the progress of the first year of our midterm management plan, Passion for the Best 2026, focusing on the ongoing initiatives. Page 3. The most important message today is that although we have seen some sharp fluctuations in the market, the strategic direction we should take has not changed at all. We have consistently worked to build an earnings structure that is less susceptible to the external environment, and when market conditions are volatile, the resilience of our performance is demonstrated by our management stance based on the basic policy of maximizing the value of customer assets and our diversified business portfolio with the equity business at its core. We will continue to work to improve our financial performance in times of market volatility. In FY 2024, the first year of the midterm plan, stable income generated from stock-related assets expanded at a level beyond expectations in the wealth management and asset management divisions. Furthermore, consolidated ordinary income, which includes base income plus profits from the alternative asset management and GM and IB divisions, exceeded 200 billion yen. As a result, the annual dividend reached 56 yen per share, the highest ever, outperforming the promised annual dividend of 44 yen. Combining up to 50 billion yen in share buybacks, the total return shareholder ratio was 83.6%, a very high level. In addition, the collaboration with Aozora Bank and Kampo, Japan Post Insurance, with whom we entered into a capital and a business alliance in May last year, is progressing well. We will continue to invest in growth areas and further expand stable earnings to further increase corporate value. Let me begin with a review of the progress made in the first year of the midterm plan. Page 5. No change to our future vision for FY 2030. We will continue building a business portfolio that is resilient against external environment, aiming for ordinary income of 350 billion yen or more in FY 2030. Achievement of this goal does not rely on any particular division, but rather on every division growing profits in its own right while executing the inorganic growth strategy to achieve a higher ROE sustainably. Page 6 shows the progress of KPIs in the midterm plan. FY 2024 ended with the results in line with the strategy. Ordinary income was 224.7 billion yen, surpassing the 200 billion yen for the first time in 19 years since FY 2005. With ROE of 9.8% and base income of 137.5 billion yen, both KPIs are improving faster than expected toward their targets for FY 2026. Page 7. Here are results by segment. Ordinary income in the Wealth Management Division was 80.6 billion yen, driven by penetration of a total asset consulting. The Asset Management Division earned a record high of 77.4 billion yen. In Securities Asset Management, fund inflow continued, while in Real Estate Asset Management and Alternative Asset Management, gains were secured through strategic portfolio reshuffling. The GM and IB divisions also posted a record high. The ordinary income in Global Investment Banking was 42.7 billion yen, a record number. The equity income increased significantly, led by large primary deals and sale of cross-held policy shares, and M&A income also reached a record high. Through diversification of the business portfolio, the company has been able to demonstrate a profit structure and stability resilient to market conditions. Page 8. Here is a comparison of our revenues and SG&A expenses with FY 2021, the first year of the previous midterm plan. As shown in the left graph, expenses increased, but revenue has grown even faster to make ordinary income bigger. As shown in the right, the main factors for SG&A expense increase were wage hikes to strengthen competitiveness, performance-linked bonuses, trading-related expenses that are highly linked to earnings, an increase in strategic IT expenses, and the impact of the yen's depreciation. Page 10. Before I start explaining the strategies of each division, I would like to talk about our business environment. FY 2025 started with a Trump tariff shock, but I would like to reiterate that the strategic direction of the company has not changed at all. In 2024, with the start of the new NISA and the robust equity market, the savings to investment shift gained a momentum as if a dam had burst. In 2024, investment using NISA accounts was 17.4 trillion yen. This is equivalent to the total NISA investment size of the last 4 years since 2020. The number of NISA accounts has exceeded 25 million. Today, about 1 in 4 adults have a NISA account. The share of stocks, investment trusts, and bonds in household financial assets has been steadily rising, reaching 20.9% at the end of 2024. And household financial assets are expected to continue growing. According to estimates by Daiwa Research Institute, they will grow approximately 2.1 times over the next 20 years. On the other hand, since there will be a decline in the population and the number of households, average financial assets per household are expected to increase even more than now. Page 11. Changes are also happening on the corporate side in Japan. As a result of a series of M&As and MBOs, the number of TSE delistings reached a record high in 2024, and the number of listed companies began to decline for the first time. In Europe and the United States, the number of listed companies has been declining for more than 10 years. Even in Japan, where the number of listed companies has been continuously increasing, it is expected focus from a quantity to quality will lead to more delistings. The number of shareholder proposals and investments by activists are growing. About 80% of the companies set ROE targets in their midterm management plan. Furthermore, we are now seeing not only TOBs without consent by domestic companies, but also TOBs without prior consultation. M&A propositions may knock on door out of the blue at any time. More than ever, management is worried and thinking about capital efficiency and increasing a corporate value. This trend will undoubtedly accelerate this fiscal year. Page 12. For more than 8 years, the Wealth Management Division has focused on transforming its business model to an asset management business model while promoting sales reforms with a focus on improving customer satisfaction. We are also working on proposals to improve our clients' portfolios through total asset consulting. As a result of these initiatives, asset-based revenue in FY 2024 reached 111.7 billion yen, up 20% from FY 2023, and is growing faster than our midterm plan assumption. There, by responding quickly to trading needs during market volatility, flow revenues are steadily increasing. The market has been very volatile since April. More clients have taken a wait-and-see attitude, but mutual funds and fund reps continue to see net growth in assets under management, driven by strong investment needs. The company will aim to achieve a further growth in asset-based revenues and profit sustainably toward FY 2030 by making a sincere effort to provide total asset consulting services to each and every client without being influenced by market environment. Page 13. The graph on the left shows the asset-based profit trend. The profit has been steadily expanding since FY 2020 when it turned positive. Asset-based profit is calculated by deducting expenses such as personnel and IT from the asset-based revenue, which I explained in the last page. Unlike revenue from flow business, asset-based revenue is earned stably as long as we manage customer assets. We believe that our consistent transformation to an asset management business model from a long-term perspective has led to steady growth in both top-line revenue and bottom-line profit. The graph on the right shows the coverage ratio of fixed costs and total expenses of asset-based revenue. For the first time in FY 2024, the annualized fixed cost coverage exceeded 100%. Now the asset-based revenue alone is big enough to cover the fixed costs such as personnel and IT. We will continue our efforts to grow not only the top line but also the bottom line profit stably through the right cost control. Page 14. In our ongoing efforts in total asset consulting, we structure a holistic proposal based on the client's total assets, including non-financial assets such as real estate in addition to financial assets. The first step is to understand customers. This process was put in practice at all sales branches. Since the second half of the last fiscal year, proposals for portfolio improvements supported by our in-house asset management planning tools have been applied more widely than before. Through consulting services, we could grow AUM in private asset investment funds to satisfy the needs of high net worth clients and to diversify their asset classes. Also, we made good sales through large financing projects such as Japan Post Bank and JX Nippon Mining and Metals. We knew customer profiles and needs accurately through ongoing total asset consulting, which allowed us to put forward timely proposals, and this led to a high deposit ratio. Furthermore, by utilizing various tools to visualize the status of our clients' portfolios, we were able to understand their needs in more detail and propose optimal solutions, leading to inflow of assets from other companies. The numbers clearly reflect the effectiveness of our initiatives. More information on our solutions to ultra-high net worth and high net worth clients is in the next page. Page 15. The high net worth population in Japan is increasing year by year and is expected to grow further in the future, while the needs of our clients are becoming increasingly diverse and sophisticated. In order to provide solutions that more accurately meet the needs of our clients in a timely manner, we are not only improving the skills of individual consultants, but also strengthening the organizational support system and collaboration across divisions. We are also continuously working to expand the lineup of solutions. In January this year, Daiwa Airborne, a joint venture with Airborne Capital, began sale of aircraft JOL products, a tailor-made solution for ultra-high net worth clients to strengthen more customized solutions. Furthermore, in April, we opened our 6th office, a real estate office, at our Fukuoka branch and are now ready to respond promptly to the needs of our clients regarding real estate. As a result of our efforts to accurately understand our clients' needs and provide optimal solutions through total asset consulting, the flow of assets from clients in FY 2024 expanded significantly to 1,573.3 billion yen. I am confident that in FY 2024, we did improve our customer satisfaction. Page 16. This is the NPS, Net Promoter Score, of 5 face-to-face securities firms based on an internet survey indexed with February 2024 as the base month. Our scores have increased dramatically in the last 6 months. Analysis of the questionnaire results in this survey indicates that the penetration of a total asset consulting has contributed to the improvement of customer satisfaction, particularly in proposals based on a customer's total assets, using tools such as asset management planning with a deep understanding of each customer. This is particularly effective in improving customer satisfaction. We believe that improving customer satisfaction is essential to maximizing customer asset value, which is the basic group management policy of the current midterm management plan. Through total asset consulting, we aim to improve the customer satisfaction and realize maximization of a customer asset value by accurately identifying potential customer needs and proposing and providing optimal solutions. Page 17. In our total asset consulting services, it is essential to secure sufficient time for consulting and pre-consulting preparation in order to gain a deep understanding of our clients' needs and make optimal proposals. Therefore, we are striving to create more time for consulting and further improve the quality of our consulting services by increasing productivity and improving operational efficiency. Specifically, we have established a system that can effectively support customers through an optimal approach that combines human and digital resources. For example, our contact center achieved solid results, such as a significant increase in monthly investment amounts, by using digital to efficiently reach out to our customers, especially those of retiring age in the workplace segment. This segment is expected to increase going forward. Furthermore, in January of this year, we introduced an automatic recording system for customer interviews that utilizes generative AI and voice recognition technology to improve the efficiency of minutes making and achieve highly transparent communication with customers. We have led the way in advanced initiatives such as introduction of ChatGPT and AI operators powered by generative AI ahead of other companies. We will continue to make further use of digital technology to enable our consultants to focus on higher value-added selling activities. Page 18. About Daiwa Next Bank. Daiwa Next Bank was established in 2010 and began operation in 2011. There were 2 founding objectives. One is to serve as a gateway to attract money from savings to investment, and the other is to offer high interest rates to depositors through a low-cost, market-driven business model. With Daiwa Next Bank, we can generate profits by collecting funds from customers in very safe deposit products and promote cross-selling with equity products. We can earn interest gain by investing the deposit money for a better return than the deposit interest rate. For a long time, the yen interest rates had been negative, and the interest gain was low. But since the end of negative interest rates in March last year, the margin has expanded significantly. The spread reached almost 30 basis points as of the end of March this year. In addition to Daiwa Next Bank's non-consolidated ordinary income, Daiwa Securities also generates an equivalent or greater amount of agency fees and the combined total profit of the banking business grew to about 30 billion yen in FY 2024. Page 19. As you find in the balance sheet, Daiwa Next Bank has a great opportunity to increase earnings thanks to higher interest rates and deposit growth. On the left side of the balance sheet, cash and due from banks will contribute to earnings as the interest rate goes up in the current account at Bank of Japan. The majority of loans are extended to government, and with a floating interest rate, they are sensitive to interest rate. The securities portfolio is highly resilient to rising interest rates, using interest rate risk hedges, and an average duration is a little longer than 1 year. Thus, Daiwa Next Bank is a highly interest-sensitive portfolio. It is capable of growing a profit significantly by growing a deposit fund. Page 20. I will explain the progress of our strategy to expand our customer base through alliances with external companies and our new initiatives. As for collaboration with the Japan Post Group, the balance of Japan Post Fund Wrap, which was launched in May 2022, has reached approximately 190 billion yen by the end of March 2025. In alliance with the Shikoku Bank, we achieved the target for securities balance set at the beginning of the alliance 3 years ahead of schedule, and have set a new target of 550 billion yen by the end of March 2028. We will pursue an asset management business model tailored to each region by combining our knowledge, experience, and platform in the securities business with a community-based support system, including an alliance with Iwate Bank, with which we aim to establish a new collaboration in April 2026. In addition, we announced new collaboration in some of the services of Mitos, a financial services brand developed by Iseta Mitsukoshi Group's MI Card in March this year. In the crowdfunding field, the group's FinterTech has already partnered and launched services and is currently preparing for the launch of services in the asset management consulting field in the fall of this year. We will continue to actively pursue alliance with companies that have a strong customer base. Page 21. Let me explain asset management division. First, in securities asset management, attractive products created inflow of a fund and assets under management as of the end of March 2025 was 33 trillion yen. In the publicly offered trust fund area, we are expanding our lineup of high value-added and differentiated products, such as alternative products, as well as enhancing our services for distributors. We invested in Global X, an asset management company specializing in ETFs in 2020. In February 2025, we converted the convertible bonds of a Global X and acquired 20% of the stake. As a result, Global X became an equity method affiliate and is expected to contribute to our profits, supported by amazing growth of the U.S. ETF market. Page 22. Here is the status of the capital and business alliance with the Japan Post Insurance, JPI. In October 2024, JPI acquired 20% of Daiwa Asset Management. By organically collaborating with the JPI, one of the largest asset owners in Japan, we aim to reform our asset management capabilities and improve our asset management functions by adding the perspective of asset owners through full-scale entry into the investment advisory business domain, including the alternative field and mutual exchanges of asset management personnel. Under the alliance, JPI has already entrusted us over 2 trillion yen. In addition, we have completed the first investment in a joint effort to promote emerging management companies, so-called EMPs. This program is also supported by the government of Japan. By teaming up with a JPI, we will contribute to realization of an asset management nation by identifying emerging asset management companies with strong investment capabilities and facilitating the smooth supply of funds. In March this year, we signed a capital and a business alliance agreement with the Japan Post Insurance and Mitsui & Company Group. We announced acquisition of a Mitsui & Company Alternative Investments as a subsidiary. As a result, Daiwa Asset Management has made a full entry into the alternative asset management field. It will promote development of a public and a private investment trusts and the cultivation of specialists through personnel exchanges. We will expand our business, taking advantage of the strength of a Japan Post Insurance and a Mitsui & Company. Page 23. Since our entry into the real estate asset management business in 2009, assets under management have grown. This segment has contributed to stable profit generation for the company through mergers of asset management companies and REIT funds, stronger warehousing functions, and so on. AUM is steadily expanding, reaching 1.6 trillion yen as of March 31, 2025. The group's AUM is unique in that it is composed mainly of rental housing and mid-sized office buildings that are highly immune to inflation. And in fact, rents on rental housing and office buildings managed by the group's REITs are rising steadily. All of the other REITs have also maintained high occupancy rates and stable income. Although the pace of a REIT asset growth has slowed somewhat in recent months, Daiwa Real Estate was entrusted with a large private placement fund in March. We will continue to strengthen business other than REITs, such as private funds, to continuously increase AUM. Page 24. Alternative asset management firms Daiwa PI Partners and Daiwa Energy Infrastructure are transitioning from their conventional self-funded investments to an asset management model using external fund. As shown on the lower left, Daiwa PI Capital has successfully formed a private equity fund of 26 billion yen, exceeding initial expectation. This fund has already executed new investments and will focus on increasing the value of existing portfolio companies as well as finding new investment opportunities. Daiwa Energy Infrastructure sold a portion of their stake in the UK power distribution company, which contributed significantly to the group's profit last year. We aim to build a high track record by leveraging our investment know-how, performance, and network of partners in Japan and overseas to invest in quality projects and to optimize exits. Page 25. GM and IB divisions. First, global markets. The environment surrounding global markets has changed dramatically over the last decade. In addition to higher stock prices and interest rates, market trading value has also risen significantly. In response to these changes in the external environment, global markets expect to see more business opportunities. We aim to take advantage of this tailwind to increase trading revenues based on customer flow. Specifically, we will provide a variety of trading methods, such as ASR, to meet client needs, and we will also enhance our trading capabilities by strengthening human resource development. In addition, we will work to expand our client base by strengthening cooperation with the Wealth Management Division, expanding a coverage of overseas clients, and utilizing high-quality research. Page 26. Global Investment Banking was the lead manager for large deals and sale of cross-held shares for Japan Post Bank and JX Nippon Mining and Metals in the second half of the year. It came back to the third place in the public offering league table. In debt, it ranked first in straight bonds and SDG bonds for the first time since the dissolution of the joint venture. The underwriting business contributes not only to the revenue of the corporate and GIB divisions, but also flow revenue and capital inflow through collaboration with Wealth Management Division and GM Division. Demonstrating its underwriting skills in a wide range of deals, it was awarded the House of the Year Award in the overall category of the Deal Watch Award. M&A also significantly exceeded last year's results. The company ranked in the 7th place in the global mid-cap M&As. Page 27. The group's M&A-related revenues are steadily expanding toward its fiscal 2030 target of more than 70 billion yen. In the last fiscal year, as a result of our increased sector-specific expertise and a focus on providing thematic solutions, our engagement in large-scale M&A deals increased dramatically in Japan, in particular, resulting in improved profitability. We work on overseas M&As with a cost control consciousness. Signs of a recovery are beginning to emerge, although it will take some more time for the market environment to turn around. We continue to expect an abundant pipeline both in Japan and abroad in the current fiscal year. Now it is a matter of time that the overseas market will make a real recovery. Page 28. The progress of our collaboration with Aozora Bank. Aozora Bank and we each aim to achieve 10 billion yen in alliance synergy in FY 2027, mainly through initiatives in GIB and corporate divisions. We have completed the stage of creating a framework, including the identification of synergy areas and compliance, and are now in the phase of delivering results in practice. In April this year, 20 people from Aozora Bank were loaned to Daiwa Securities head office and branch offices, and personnel exchanges will be in full swing. Fund rep sale by Aozora Bank is scheduled to begin in the fall. Targeting our very important corporate customers, Aozora executed many corporate loans, unsecured loans for startups, loans for REITs, and asset finance. The solutions provided by Aozora Bank's investment and loan functions are a strong weapon that we did not have before, and we believe that promoting a collaboration between the two will be a win-win initiative that will benefit our company, Aozora Bank, and our customers. We are determined to reap the fruit of this collaboration. Page 29. We announced collaboration with the Sumitomo Mitsui Trust Group recently. One area of collaboration is asset management and administration. We will build a data-sharing infrastructure to connect distribution company, asset management company, and a trust bank to reduce IT cost and improve operation efficiency. Thus, we will accelerate Japan's transition to asset management center. The other area is M&A advisory. In this area, with the challenge of securing human resources to respond to the increasingly active M&A market, DIR Daiwa Institute of Research will accept personnel on secondment from Sumitomo Mitsui Trust Bank to strengthen execution team and utilize SMTB's client network to get more deals. Page 32. Financial and capital policies and capital allocation. The pillar of the group's strategy in the midterm management plan is management resource reallocation and management enhancement, shown in the left. First, dividend payout ratio is 50% or more, and a minimum dividend will be 44 yen per year for the period of this midterm plan. Regarding the remaining half of the surplus, there is no change in our policy of implementing financial and capital strategies that consider all stakeholders and aim for sustainable corporate value enhancement while ensuring a balance between growth investment and additional shareholder returns. However, as I always say, the environment surrounding our group is currently favorable for us. I believe that we are in a phase to aggressively prioritize growth investment in order to enhance our corporate value over the mid to long term. We will create a positive cycle of making profits from growth investment, using the profit for shareholder return and further growth investment to generate even more profits. As shown in the right, the impact of the finalization of a Basel III on the consolidated total capital ratio is expected to be a decline of 2 to 3%. The previous projection was down 3 to 4%, but this is the revised estimate based on a more accurate calculation. The capital buffer after full application is expected to be in the range of 300 to 400 billion yen, but there are variable factors such as foreign currency translation adjustment accounting for about 2% of the capital ratio, and the impact on the credit rating must also be fully considered. Growth investment is essential to achieve sustainable growth of the entire group. We will not miss any growth opportunities and rigorously manage return on capital by segment and business line to achieve sustainable improvement of ROE. Page 34. We have continuously promoted 3 pillars of a growth investment: expanding a customer base, enhancing functions and expanding products, and open innovation. As you know, some investments produce results quickly, while others require a certain time to generate synergies. As a result of our efforts to date, new businesses have steadily contributed to profits in each segment, with cumulative profits from new businesses since FY 2010 exceeding 300 billion yen and ROE being 10% in FY 2024. Following R&I's rating upgrade in May last year, JCR in December, and Moody's in February of this year announced that they would raise our outlook on the company's rating from stable to positive. In particular, our efforts to build a business portfolio focused on enhancing stable earnings have been highly evaluated. Although not shown on the slide, we have estimated the effect of the rating upgrade on funding cost reduction. If all long-term funding instruments like corporate bonds and bank loans go down by 10 basis points, the annual cost reduction will be about 1.6 billion yen. We believe that diversification of the portfolio by adding new businesses could contribute to stabilization of our revenue as well as a cost saving due to the upgrade. We will continue to strategically utilize our capital to build a foundation for further growth and enhance our corporate value. Page 37. Since President Trump took office, sustainability programs have been under pressure in Japan and internationally. Even under such circumstances, we emphasize our commitment to sustainability programs as a driving force for our business's own sustainability and change. We will continue to contribute to the realization of a 2030 vision, creating a prosperous future through financial and capital markets. Page 38. With respect to a sustainable finance, we ranked number 1 on the league table of SDG-related bonds in FY 2024 for our support of SDGs bond issuance. Furthermore, in impact finance, we are expanding the market and accumulating business cases through investment in and launch of the impact funds. Page 39. With regard to our digital strategy, we will continue to apply the latest technology in all aspects of our operations to both sustainably increase the value of existing businesses and create disruptive value. In April, we launched D-Port, a smartphone application that offers our products and services in one stop. Last but not least, our efforts to maximize customer asset value, which is the basic group management policy in the midterm management plan, are taking roots for sure. In each business area, I can feel that we have built a system to deeply understand the needs and challenges of our customers and provide the best, most appropriate, and high-quality solutions to suit specific situation and economic conditions. In addition, we spent a long time to diversify our revenue sources and established a profit structure that is resilient to the external environment, as well as expanding stable earnings. We will continue to grow the wealth management and securities and real estate asset management divisions, which have relatively small profit volatility, while pursuing profit upside in the alternative asset management and GM and IB divisions, which have high flexibility and earnings potential. We would like to actively engage in a dialogue with investors and analysts, and I would like to ask for your continued support. Thank you very much for listening.
ご清聴ありがとうございました。